while forming what are the issues will be there. For this we have CS NL Bhatia, who is a senior member. Before he begins his session, may I request the chairman of the committee, Sri Vipul Bhai, to present the memento. Before the memento, may I request Kaushik Javeri, CS Kaushik Javeri, to introduce NL Bhatia.
Thank you, Paras Bhai. Good morning, everyone. It's my great pleasure to introduce Sri N.L. Bhatia, one of the senior most practicing company secretary. Mr. N.L. Bhatia is fellow member of Institute of Company Secretary of India. He has master degree in arts and law from Mumbai University. He also holds a certificate diploma in tax management from Mumbai University. He has over 4 decades of experience in company law, security laws, and capital markets. In the year 1967, he obtained membership number, and an initial 15 years of his career, he served as a senior executive position in secretarial and legal department of large companies like JK Group, Voltas, that is Tata Group company. He was appointed as the chairman of Western India Regional Council of the Institute of Company Secretary of India in the year 1989. He was also founder chairman of CCGRT, formerly known as CCRT. He is on the panel of arbitration of National Commodity and Derivative Exchange Limited, NCDEX, and Bombay Chamber of Commerce and Industry. He is also president of Investor Education and Welfare Association, a SEBI registered association. He is the trustee of Investor Protection Fund of Bombay Stock Exchange Limited. He is a director in ICICI Investment and Management Company Limited as independent director. Also director in Piramal Phytocrat Limited, Tripan Papers and Allied Private Limited. He has authored books also on the subject SEBI Substantial Acquisition of Shares and Takeover Code 1994, forward by Mr. V.H. Pandya, former Senior Executive Director of Security and Exchange Board of India. Another book, Takeover Games and SEBI Takeover Regulations 1997, in the year August 2002. That was forwarded by Mr. G.N. Bajpayee, then chairman of SEBI, and it was published by Taxman. We are extremely grateful to have Mr. Bhatia on this morning, and we welcome Mr. N.L. Bhatia and request Chairman Vipul Bhai Choksi to offer moment on behalf of all of us. Sir, floor is yours.
Thank you, Kaushik, for giving a nice introduction. I think our session is running late, so perhaps we may have to rush. The topics covered, as Paras rightly said, is important definitions, change in formation, related products, procedures, administration and management, OPC, small companies, foreign companies, dividend, IT fund. When we're talking about definitions, I would say that in the 2013, all definitions have been put under section 2. There are about 95 sub-clauses defining various things. As compared to the 56 Act, there were only 50 sections, and the definitions were dispersed in many places under the old Act. The one action which has been taken by drafting is to put all the definitions under section 2. Now, talking about the important definition, the first new thing which has been brought into this Act is the concept of one-person company. One-person company means one member. In that company, there will be only one member. Then we come to the definition of a private company. In the case of a private company, one important change which has been made is that the number of members has been increased from 50 to 200. That is, now the number of members can be 200 in a private company. Another thing which has happened with the private company is that many of the privileges and exemptions which were available under the 56th Act have been denied under the new Act. Then listed company has also been defined in the Company Act now. A company which has any of its securities listed on any recognized stock exchange. There are two types of securities which are listed. One is the equity, which we all know. There are certain companies whose debts are also, debentures are also listed. So any type of securities if it is listed, it will be taken as a listed company. Then a new concept of a small company has also been brought into the Act, and that paid up share capital of a small company shall not be more than 50 lakhs. The provision has been made in the rules that it can be increased up to rupees 5 crore. Then there is another thing that turnover of a small company should be less than 2 crore. There is an inbuilt provision that it can be increased by rules, change of rules to up to rupees 20 crores. Now,
this transition from a private company to a small company automatic by when you are not exceeding the limit prescribed. So
Yeah.
it's automatically you will be governed by small company provisions, or you have to opt for it by filing some form.
there is no option at the moment they are indicated here.
Okay.
But perhaps maybe in course of time they may say you may have to file some form, because if these two criteria are met out,
Yeah.
then you already fall under the category of a small company. Now, who will not be considered as a small company, that also is provided, that a holding company or a subsidiary company will not be considered as a small company. A company registered under Section 8, which is anomalous to Section 25 of the 56th Act, with regards to NGOs and non-profit making companies. Then a company or body corporate governed by any special act, that is also will not be covered and taken as a small company.
Any special benefit for small companies?
Pardon?
Any special benefits assigned to
There are some small benefits, we will come to that. Yeah. A company can be classified as a dormant company when it is formed and registered for a future project. Now this is new concept which has been introduced of the dormant company. So future project, we have many times is setting up private companies or public companies for a future project. So there will be a phase where it will be considered as a dormant company, or a company which is only asset holding, like intellectual property rights, doing no business or anything, and no significant accounting transaction. These are the conditions to become a dormant company. Such a company or an inactive government may apply to the ROC in such manner as may be prescribed for obtaining the status of a dormant company. Now here there is a provision that you have to apply to become a dormant company. But so far as that private company, small company, that is not required. But here there is a provision that you have to apply to ROC to declare yourself as a dormant company. Now, significant accounting transaction has also been defined as it will not be payment of fees by a company to the registrar, payment made by it to fulfill the requirements of this act or any other law, allotment of shares to fulfill requirements of the act, and payments or maintenance of the office records. So these are the bare expenses which a company is required to maintain its status, and those expenses will not be considered as significant accounting transactions. Then there is also a new concept of brought in of inactive company, a company which has not been carrying on any business or operation or has not made any significant accounting transaction during the last 2 financial years or has not filed financial statement and annual returns during the last 2 financial years. So if any of these conditions are fulfilled, then it will be considered as an inactive company. Then another concept which has been brought in is of associate company, and this is very important. It will play its role in many of the transactions with related party. So a holding company has significant influence on the other company. Such other company is said to be an associate company. Now an associate company can be a joint venture company but not a subsidiary company. Now significant influence has also been defined, means control of at least 20% of total share capital. So if we are holding more than 20%, the company will be considered as an associate company of yours. Or of business decision agreement, if there is a joint venture agreement and there asset is required for carrying out any proposition of law or regulation or business, then it will be considered as your associate company. Subsidiary company or subsidiary in relation to a holding company means a company in which the holding company controls the composition of the board of directors, which is the existing provision, exercises or controls more than 1/2 of the total share capital. Now here, so far we were looking into the equity concept, that if we are holding more than 50% of equity, then it will become your subsidiary. Now that word has been changed, half of the total share capital, which will now include the preference capital also. So that is the major change which has been brought in, either at its own or together with one or more of its subsidiary companies. Another concept which has been introduced is regard to the key managerial personnel, and that includes the chief executive officer, the managing director or the manager in one category. Then you have the company secretary, the whole-time director, the chief financial officer. So all these people will be considered as key managerial personnel, and they will be responsible for various acts under the act.
Is the manager defined, the term manager?
Manager under the Companies Act. See, it is also defined. Manager, see, normally there is a general concept of a manager, but there is a provision that manager under the Companies Act. Now, if you have a manager under the Companies Act, you need not have a managing director. Many of the places, the company, when they find it difficult to appoint a managing director, they appoint one of its employees as a manager under the Companies Act to fulfill the requirement that the company should have a managing director or managerial personnel. For that reason, that manager will also be considered if he is appointed under the Companies Act, not the other general perception which we have about the manager. It can be manager of sales department or HRD or something. That will not be considered for this purpose. It is only if he is appointed under the Companies Act in compliance with the various provisions of the Act. Then the definition of promoter has been given, which is almost identical with the same which we have under the SEBI Act, SEBI regulations. So the basic attempt of both Companies Act and the SEBI is to amalgamate the things and have a systematic thing. There should not be difference here and difference there, so that the definitions which are used by SEBI have been incorporated in the Companies Act. For example, the independent director was never defined in the Companies Act, but now it has been defined following the provisions of the clause 49 of the listing agreement. So, person who has been named as such in a prospectus if he is named in the prospectus as a promoter, then he will be considered as that, or is identified by the company in the annual return referred to under section 92 of the 13 Act, that these with annual return. So if in the annual return, if you have defined him as a promoter, then he will be considered as a promoter. If you have disclosed it as a promoter in the prospectus, then also he will be considered as a promoter. Another thing is who has control over the affairs of the company directly or indirectly, whether as a shareholder, director or otherwise. So, in accordance with those advice, directions or instructions, the board of directors of the company is accustomed to act. A concept of a shadow promoter has also been introduced in this context, so that the people who are directing but not on the board, they will also be considered as promoter. One of the doubt which was raised, if we are giving only professional advice, whether we will be clubbed as part of the promoter. So that is if it is only a simple advice, but the decision is to be taken by the management, we will not be clubbed as promoter. Then independent director, as I said, the earlier act did not define the independent director, but in the 2013 Act it has been defined. An independent director in relation to a company means a director other than a managing director or a whole-time director who will be clubbed as the promoter director or a nominee director. So that was one doubt and debate going on all the time, whether a nominee director is to be considered as an independent director or not. But now this has been clarified that a nominee director will not be considered as an independent director. This is the same position both under the Companies Act now and the SEBI regulations. Now these are the new words which have been introduced in respect of the independent director, that he is a person of integrity and possesses relevant expertise and experience. So, who is or was not a promoter of the company or its holding subsidiary or associate company, who is not related to promoters or directors in the company, its holding subsidiary or associate company, who has or has no pecuniary relationship. When we talk of pecuniary relationship, earlier the concept was material pecuniary relationship. The word material has been deleted. So the pecuniary relationship has become of wider import and may be point of discussion at many places where there may be any difference of opinion. Or have no pecuniary relationship with the company is holding, subsidiary or associate company or their promoters or directors during the two immediately preceding financial years or during the current financial year. So while we have to check whether a person is an independent director or not, all these conditions will have to be verified. None of whose relatives has or had pecuniary relationship or transaction with the company, its holding, subsidiary or associate company or their promoters or directors amounting to 2% or more of its gross turnover or total income or 50 lakh rupees or such higher amount as may be prescribed, whichever is lower, during the two immediately preceding financial years or during the current financial year. So these are very harsh conditions which have to be very minutely to be checked to identify whether a person is an independent director or not, who neither himself nor any of his relatives holds or has held the position of a key managerial personnel or is or has been employee of the company or its holding subsidiary or associate company in any of the 3 financial years immediately preceding the financial year in which he is proposed to be appointed. Now the term relative has also been widened. Now it covers almost 5 generations of the people. So therefore we will have to be more careful about defining to ascertain whether he is a relative or not. Is or has been an employer, proprietor, or a partner. Now this is also very much widened. In any of the 3 financial years immediately preceding the financial year in which he is proposed to be appointed of a firm of auditor. So if you are an employee or proprietor or a partner of a firm of auditor also, or company secretaries in practice, or cost auditors of the company, or its holding subsidiary or associate company, then you cannot be appointed as an independent director. Any legal or a consulting firm that has had or had any transaction with the company, its holding subsidiary or associate company amounting to 10% or more of the gross turnover of such firm. So, if suppose there is a legal firm which is rendering advice and carrying out the work of the company, if the income from that company to the firm is exceeding 10%, that 10% cannot be appointed as an independent director. Holds together with his relatives 2% or more of the total voting power of the company. So, if you are holding 2% or more, then also you will be disqualified being appointed as an independent director. Is a chief executive or director by whatever name called of any non-profit organization. Now this is a new concept which has been brought in, that if you are a chief executive of a section 25 company or organization or a society that receives 25% or more of its receipts from the company, any of its promoters, directors or its holding subsidiary or associate company, or that holds 2% or more of the total voting power of the company. Now these are very restrictive conditions which will be applied when the company corporate social responsibility provisions will come into play. Because if you are getting, if this section 25 company or a society or interest is getting more than 25% of help from a company, then also it will be disqualified for appointed as an independent director. Independent directors are required to adhere to Schedule 4 relating to code for independent directors. These are very strict provisions in the code which has been prescribed. The code consists of guidelines of professional conduct, how they have to conduct, details are given there. Role and functions of independent director, duties, manner of appointment, reappointment, resignation or removal, separate meetings, evaluation mechanism. These are all things which have been introduced for the duties and responsibilities of the independent director. So, the position of an independent director is no longer a bed of roses. Earlier it was considered to be a position of privilege in society that you are a director in a company. But now, with all these onerous responsibilities which have been entrusted on an independent director, they are finding it difficult to get independent directors who are willing to be crucified. Now this is another definition which has been widened, is officer who is in default. These are the people who are responsible, officer in default, full-time director, key managerial personnel. Where there is no key managerial personnel, such director or director were specified by the board in this behalf, and whoever have given his or their consent in writing to the board to such specification, or on the directors if no director is so specified. These are the existing provisions. But as we go forward, you look at it, and the item 4, the last word, are knowingly fails to take active steps to prevent any default. Now, That means if you are a director in a company, you have to be very, very vigilant to ensure that you have not failed to take active steps to prevent any default. We have just have this Maruti Suzuki matter where independent directors have also not approved the transfer of Gujarat plant to Suzuki. So, if you are independent director and you are not taking that due caution to prevent it, then also you will be responsible for it. And the problem is that the independent director is appointed to the promoters, but they are responsible and they are duty bound to take interest of the shareholders and stakeholders. Now that term shareholder has also been enlarged. The earlier word used was shareholders, now it has been converted into stakeholders. A question was raised before SEBI as to what it includes, and the question that the answer is that it also includes depositors and debenture holders. So the definition has been widened. Any person in accordance with whose advice, direction or instructions the board of directors of the company is accustomed to act other than a person who gives advice to the board in a professional capacity. So if the board is accustomed to act on somebody's advice, he will also be considered as an officer in default. Now every director, this is also an enlarged issue. Every director in respect of contravention of any of the provisions of this Act, who is aware of such contravention by virtue of the report received by him of any proceedings of the board or participation in such proceeding without objecting to the same, or where such contravention had taken place with his consent or connivance. So, if earlier it was only limited to connivance or consent, but now it has also been enlarged to say if you have not objected. So, not only the passive consent, but also you have to be active in objecting to it. In respect of the issue or transfer of any share, now this has been further enlarged that the share transfer agents, registrars and merchant bankers to the issue or transfer, they will also be responsible and will be considered as an officer in default in certain circumstances. Now the financial statement definition has also been enlarged, which will also include a cash flow statement. Earlier profit and loss account balance sheet is already there, but now it is defined to include cash flow statement and also a statement of changes in equity if applicable. So if there is any change in the equity holding during the year, that will also be part of your financial statement. And any explanatory note, Annex 2, are forming part of any dormant company referred to in such clause to such clause 1 to subclass 4, provided that the financial statement with respect to one person company, small company and dormant company may not include the cash flow statement. So this is one of the concessions which has been given to the small company. Then we come to the definition of a financial year. Now the financial year has been made uniform from 1st April to 31st of March next year. So, and wherever it has been incorporated on or after the first day of January of a year, the period ending on the 31st day of March of the following year, in respect whereof financial statement of the company or body corporate is made up. Earlier there was a provision that you can have a financial year up to 15 months,